Welcome to the Diary of a High Net Worth Investor podcast with me, Graham Rowan, founder of the Inside Investor Club and chief coach on the 8-figure journey, where we use private equity to build the lifestyle you want today and a legacy that will make a real impact. You can learn more at 8figuremasterclass.com. Welcome back to Diary of a High Net Worth Investor. If you caught my recent interview with Sven Lorenz, you may recall the important role that islands have played in his life. Well, we have a similar theme in this episode where you're going to hear from two business partners, one from the Spanish island of Majorca and the other from that financial hotspot in the Irish Sea, the Isle of Man. They have very different backgrounds, but a shared love of all things financial. Unusually for two guys steeped in the traditional regulated financial world, they were early adopters of cryptocurrencies like Bitcoin and eventually decided to launch the world's first digital asset fund of funds under their block asset management company. Their names are Kevin Ballard and Manuel de Luque. Gentlemen, welcome to the show.
Thank you very much.
Thank you very much.
Kevin, let me start with you. I believe you were actually born and bred on the Isle of Man. So tell me about your early life and how you came to be involved in the investment world.
Okay, well, the Isle of Man is a wonderful place. It's certainly for an upbringing, if you're looking to bring up a young family here, all the things as we'll come on to later on that drove me away from the Isle of Man brought me back to the Isle of Man later in life. But the Isle of Man's a wonderful place to grow. Very safe, very scenic, very quiet. As I sit and look out the window, I see fields, countryside, farms, and cows, which is not too unusual for the Isle of Man. But I grew up in a quite a big family, 4 boys, in a council estate here on the Isle of Man, and was the first in my family to head off to university. I grew up a mad football fan. You'll see from the shirts behind me as well. For those that can see, I'm not sure if you can see the videos, but I was an avid football fan and grew up a very good footballer in the Isle of Man with aspirations to be a professional. So therefore, moving into the finance industry was not something I envisaged. But I went to university, studied sports science and psychology, and come back and almost fell into a role in financial services through, as so much of the Isle of Man is, everybody seems to be into the financial centre. So the dreams and aspirations of a sports career faded and a career in financial services beckoned. Initially with one of the island's largest investment companies or life companies, which is then Royal Scandia. It's gone on to be known by many names since then, OMI, Quilter, and more recently the merger and buyout by Utmost. So that was my first role as I come back from university. And then from there, my largest relationship, if you like, the client relationship that I managed was with the world's largest IFA firm. And they were looking for someone to move to Mexico City to run the administration and compliance in what was at the time their biggest and most successful office globally. And off I went and started an adventure from this little, safe, peaceful, quiet Isle of Man into one of the world's largest cities, not speaking a word of Spanish, and head up compliance and administration for the world's largest IFA firm. So, a real step into the deep end at that point.
And how old were you at that point?
I was 24 years of age at that point. So that was back in 2004.
That must have just been such a culture shock to go to a place like Mexico City. I mean, I don't know I can't imagine what it was like after the sleepy old Isle of Man.
It was I don't think there's been many sort of bigger culture shocks than moving from the Isle of Man to Mexico City, but it's a wonderful place. I would tell anybody, and I often do if you get the chance to visit, it's an amazing city, full of wonderful people, wonderful weather and wonderful food. And lots of culture and history there as well. So I won't have a bad word said about Mexico City. Don't believe what you read in the press.
Maybe I've been watching Breaking Bad too much, but all these Mexican drug cartels, I wouldn't go near the place myself, but I'll take your word for it. So let me move to you, Manuel. You grew up in the much warmer climate of Majorca. Same question. Tell me about your early life and your early career.
Yeah, well, I was a similar, beautiful island. It's different now than what it used to be back in the 70s when I was born. Obviously, it's a totally different world now. The tourist industry was not so big. But anyway, I went to school there. Then when I was 18, I went to Madrid, to university, and then I moved to London to continue my studies. And that's where I always wanted to be in banking. So my first job was with Lloyds Bank. And once I think I sent about 200 letters to apply for all the banks, all the financial positions, and Lloyd sent me an offer. And the first and I said, yeah, definitely I will take it. But they told me that the role was going to be developing the Isle of Man. At the time, we didn't have internet. It was early 90s. You didn't have internet. So the first thing I went back to university, went to the library, get into the book, What is the Isle of Man? And I found out because I didn't know anything about the Isle of Man at the time. So here I came. So I came to the Isle of Man at the time. And since then, obviously, I have been moving around a lot. I have been in the private banking sector. I was in the Isle of Man, then I moved to Spain, then I moved to Monaco, until I then moved to the hedge fund business, the fund of hedge funds.
Okay, so tell me a bit about life in Monaco, because it again has a mixed reputation. It's known as sort of billionaire playground.
Yeah.
What was it like actually living and working there?
Well, it was funny because it's like if I had the privilege, which I did, of being resident there, because a lot of people, especially French, cannot live there because there's no point. It's funny that you see how different it is if you are resident or if you are not. If you have a plate in your car that is a Monaco plate because you are resident, people treat you in a totally different way. So it's kind of I'm not saying a sect, it's not, but it's just a little bit. Um, I wasn't very keen on that. I mean, it's amazing. It's totally safe, beautiful environment. But as soon as you come out of the borders of Monaco, that you go into France, it changed. The world is just going from white to black. It's totally different world. But it was a great experience. Obviously, I was heading the Spanish market from Monaco. And I think I had a fantastic experience in there. I learned a lot. And obviously, it's what carried me out to the hedge fund business. Thanks to being there, I was headhunted by a fund of hedge funds. And that is a little bit the beginning of what we do now.
So it's interesting because we've got some members within Inside Investor Club who live in Monaco, and one of the things they say, though everyone talks about the tax benefits and all this sort of thing, their view is that actually the most important thing was the network that they're building with the other people that they meet when they do live in Monaco. And did you find it was really powerful from a networking perspective?
Yes, I mean, obviously, to become resident in Monaco, any of us can go, but obviously, you need to. I remember being in the bank, all the clients that were coming from mainly from Spain that I had that were coming into Monaco, they need to have a network. And me as a bank, I need to certify that they have. At the time, the government was happy with around 1 million that you needed to have an asset. I know that in cases it was 500,000. The problem in Monaco is the property. I know you don't pay any taxes, so it's amazing, but you pay the taxes via the property. Just to rent a little tiny apartment, you can pay 10,000 euros. So it's not somewhere cheap to stay. But I think I recommend anybody to at least if you haven't visited, just to visit because it's an amazing place. Live there is an experience, but that's it basically.
Okay, so we've got you hobnobbing around in Monaco. We've got Kevin coming from a council flat in Isle of Man. These feel like two very different backgrounds. So Kevin, how did you guys meet? At what point did you kind of get together and even think remotely about the idea of having a business together?
Well, when I come back from Mexico, and that was in 2009, on the back of the 2008 financial crisis, and my fiance falling pregnant. So as I said earlier on, all the things that drove me away from the Isle of Man, when you have a child on the way, it soon brings you back. The peacefulness, the security, the stability, etc., and the greenery. So I come back to work for Lloyd's TSB International. So Manuel's Lloyd's crossover comes into play. And I was heading up the international intermediary division. So anywhere Lloyd's didn't have a rep office, I was dealing with the expat community and growing the bank for the expat base there. So that would be oil and gas, yachting, aviation, which brought me to the Monaco Boat Show every year, doing yachting and aviation business. So the paths are starting to cross. And then I moved on to work for a UK real estate fund. Now, the reason that's important is that in 2016, on the back of Brexit, the UK real estate fund that I was working for suffered a temporary suspension, as many funds did. It gated on the back of Brexit. And Manuel and I had met a few months earlier at I think it was a housewarming party or a Christmas party of one of the bosses at Lloyd's Bank. And Manuel, as previous Lloyd's, was invited. I was invited as previous Lloyd's. And there our paths met for the first time. And it was actually our wives that really hit it off. You know, I couldn't stand Manuel when I first met him. I jest. But our wives really hit it off. Obviously, the Spanish language, they could really get to hit it off. And yeah, over the coming weeks and months that prevailed, led to the late 2016, the Brexit decision, the temporary gating of the fund that I worked for. And Manuel and I, over a few glasses of Rioja, decided that, look, you know, I think at that time Manuel was semi-retired, correct me if I'm wrong, and we were talking about creating our own business with the network that I have from my time in Mexico and working for the UK Real Estate Fund and for Lloyd TSB International. I had a network of financial advisors and wealth managers globally. Manuel had his network of more hedge fund managers, private bankers, and wealth managers. And between us, we thought, you know, well, why don't we launch our own business? And given that I'd been contacted by many products about distribution, Manuel, through his fund of funds background, had seen many funds looking for distribution. We put our heads together and created our own global fund distribution business.
And that, Manuel, I think it was called Wealthix, launched in 2016. So what was the kind of thinking behind it? And how did you go about launching and building what was effectively a brand new business?
Well, the idea, I just, when I met Kevin also, I finished in my world of fund of hedge funds. I wanted I think, let's call it a break. Not a break because I got stressed, just I got bored, being honest, and I was looking for something exciting in life, okay? And thinking, and when we met Kevin, you know, that's what we put together. We thought, okay, why don't we use all our knowledge, all our contacts that we have been building throughout the years, in something and we create something together, something that is related to wealth and related to ethics. And that's what Wealthix was created. That's what it came up to be. And the idea was basically just to pick up funds that, you know, we thought that could be more in the alternative space. And basically, we just put them to market to all our network. And that was our role, basically. And that was quite successful for a few years. We really enjoy working together, traveling together, organizing a lot of events in different cities in Latin America, even in Spain as well, and in London. So it was a great experience. And that's part of how Block Asset Management came to be. And I think, Kevin, you always like to explain that part. So
yeah, we'll certainly come on to that. But I think Kevin, we already talked about one culture shock as you went from the Isle of Man to Mexico. But if it was anything like my own experience, I had a 25-year corporate career before starting my own businesses. I mean, how did you find that transition from employee to business owner? Because it's quite a big difference, isn't it?
It is. I'll be honest and I'll say I wouldn't have done it if I hadn't met Manuel. Manuel is you know, very organized and very savvy and on top of, you know, corporate structures and everything that comes across running your own business. I was very much the enthusiastic young pup that had a great network of great contacts and wanted to get these products in front of people. And, you know, the fact that, you know, I never really fitted into a rigid 9-to-5 role. And I think that, you know, when you run your own business and anybody out there that's listening and has ideas to be an entrepreneur, and maybe many of you have had this experience and are indeed, is that you get out what you put in. You can't, it's not a 9-to-5 role. So whilst Manuel is an early riser and wakes at 4 o'clock in the morning every day, I'm quite the opposite. We're a yin and yang. I'm a night owl and I will still be working and replying to emails at midnight, dealing with Latin America. So we fit very well. But what we're able to do is really work almost round the clock at our own time, and you know, really look at the business is let's work with people we want to work with, as opposed to work with people that we have to work with or we're being told to work with. So the great thing was we can select which managers we wanted to work with, and a lot of that come down to face-to-face visits and whether we liked the individuals, not just what was happening behind the scenes and what a good product was. Yes, it had to be a good product. Yes, it had to pass meaningful due diligence. But can we work with these people? You know, it's our business now. Do we want to work with these people? And it's the same with the network of brokers and wealth managers, etc. You work with people that you want to work with. And over the years, Manuel and I had grown very, very close to a number of these clientele. And that as soon as we launched our own business, they were all over us. They were like, this is fantastic news, guys. Show us what you've got. Let's work together. So arranging our trips, as Manuel mentioned, and going to see people in the regions we had the greatest concentration and really good friendships, meant that the business was something we really enjoyed doing. And I think that's key, to do something that you enjoy.
Yeah, and so you have these funds coming to you for distribution. So how did you connect them to distribution channels? Was this back to your times with the IFA network?
Very, very much so. So basically, it was a lot of it's reverse engineered. A lot of the network would tell us once they knew we were in distribution, we have clients that have demand for a real estate fund, or we have funds that clients that are looking for this. So there were particular niches in the market and things that were coming out that brokers would tell us they were looking for, they were interested in, and we could scour the market, particularly using Manuel's contacts to find suitable products. And other times there were products that had come to us. We do the due diligence, make sure that they pass meaningful due diligence, meet the necessary teams, and then say, okay, we think this would be great to market. And we go out directly, phone calls directly or meetings with our network. I mean, we're going at the time there where really the Zoom and the digital call technology was really kicking off, and these face-to-face meetings were electronic rather than in person, but they were people we knew, and there was a level of trust already there, which was really important.
No, that is true. And it's much harder to build that from scratch over Zoom if you haven't actually met face to face. But Manuel, it wasn't long after you launched WealthX that you started dabbling on a personal level in cryptocurrencies. And I'm fascinated by the timing of this because around that time, most of the traditional financial world was deeply skeptical about things like Bitcoin. So what was it that attracted an experienced regulatory guy like you to this wild west of Bitcoin and the crypto world?
Even if you describe me as regulatory, I'm a bit also adventurous in all the ways. Especially with technology, I'm a bit freaky on technology. I just love to see how disruptive it is, everything, and how it's transforming everything. And I try every single thing I see. I have accounts in every single new app that comes up, especially now in crypto, obviously, but always, whenever I have seen anything in technology, I just say. So obviously, being crypto, blockchain technology, is something that we discovered. I mean, back in 17, I think we're having WealthX already. I remember one guy that approached us when we started studying crypto and digital assets and blockchain as a whole on a personal level. One guy approached us with a coin. It was called Green Coin. He asked us to distribute that to our network, to WealthX. We did the due diligence. Obviously, it didn't pass the due diligence, but obviously that make us. That coin doesn't exist anymore. I don't know where they are, but anyway, to make things short, I think that was that helped us to open our eyes to look for something else, and that's how it came to be that we got a fund. Kevin will cover that in a minute. We discovered a fund in the crypto space to start distributing under WealthX umbrella.
Okay, but let's come back to this due diligence idea, because one of the criticisms that's leveled at Bitcoin, and I speak as somebody who is an investor in Bitcoin, but also in things like gold, is that there's no substance to it. It's just a series of noughts and ones in the digital world, not backed by any real world assets. So as you, with your background, did the due diligence on Bitcoin, what was it you saw at that time that the rest of the financial world was failing to see?
Well, I would say the digital transformation that we call. I mean, the world needs to evolve. Okay, Bitcoin model is the only thing that can be a substitute of gold eventually. At the end of the day, a piece of gold, if you think like this, is a piece of stone. Beautiful color, but it's a piece of stone. Okay, so if you think like this and you think the whole world is going digital, which I put my head in 2016, 2017. Okay, I'm not thinking today. Obviously, today, when we have the BlackRock, the Fidelity, that's a different story. I don't have to sell anything. But at the time, we still thought that all the parameters by which Bitcoin was created, the decentralization, is totally deflationary, is so many things that could be the next gold. At the end of the day, it's two things. It's a belief, and the other thing is the network. See at the time, the number of nodes, the number of that were being used was scaling and was growing more and more. So this is unstoppable. To stop Bitcoin, you need to stop internet, basically. And that is not going to happen. So that's what we saw at the time, and that's why we looked for a Bitcoin fund at the time. Okay.
So Kevin, yeah, I mean, obviously it's one thing. You've got Wealthix going. You're dabbling in the cryptocurrencies on a personal level. At what point did you feel confident enough to think that actually we can create a fund out of these digital assets?
Okay. Basically, so I have Manuel to thank first of all for dragging me into the digital asset class, because it was he that read the white paper and said you should have a look at this and should we invest? And as Manuel being the techie, he invested, I followed suit, and we went down the rabbit hole buying our first crypto, which initially Bitcoin, but it spiraled from there. So by the time that we'd been approached by, or not approached, we were looking for a digital asset fund that we could market to our network as part of Wealthix Global Partners. We come across a group at the time called Gabi, Global Advisors in Bitcoin Investments, and they had a Bitcoin trading fund that was very impressive. We met the team, as we always do. It's part of our due diligence, and we really got on with the team. We thought, great guys. We told them what we had by way of our distribution network, and we brought one of the team members, the CEO at the time, to an event that we did in Panama. I think it was Manuel, the event that he came to. At that event, we'd have our network. So there'd be 40 or 50 of our largest network members. And we'd bring various products that would present the products to that network. And at that event, we would have a kind of a tick list at every presentation to say, which fund did you enjoy most, which was most interesting, which would you like more information on, etc. And it was unbelievable. We'd never seen a response rate like we had for the blockchain fund, for the Bitcoin trading fund, sorry. In the subsequent 3 months that followed, however, normally the investments would then follow. The investments never followed, a handful, let's say. When we went back to the network to say, and we had these tick lists to say, look, you were incredibly enthusiastic about this fund. What's stopping you from moving forward? And the same three barriers kept coming forward, the same three hurdles to overcome. The first one was, and I'll never forget, because the first one was, well, it's Bitcoin only, and Bitcoin's almost at $1,000. It's not going to go much higher. We want, and I'll never forget that quote. We want the next Bitcoin. And at the time, there was the wonderful, wacky world of various tokens that were in the top 10 that are no longer there. So hence the need for diversification. But people wanted more than just Bitcoin. The second problem was, who were Gabi? It wasn't, as Manuel mentioned earlier, your Franklin Templetons and BlackRocks of this world were not in the space. So there's this unknown manager that's coming to you about a very high risk, high reward, unknown asset class that is just Bitcoin only. So the single manager risk was something that they couldn't really absorb either. And then the third problem was that as the fund was based in at Jersey or Guernsey, as an Isle of Man boy, they're both the same to me down there. Don't mean to offend anybody. But it required, as a SIF, as a specialized investment fund, the minimum investment, correct me if I'm wrong, Manuel, was £100,000 or currency equivalent. And if you go back, even today, for many investors, 100,000 into the digital asset space is just too high. But if you go back to 2017, when we're launching the fund, and at this stage, it was Q1 2017, the bull run was just beginning of that year, it was just too much. So the single unknown manager risk, the Bitcoin only narrative, and people seeking diversification, and the fact that the minimum entry was just too high to absorb, we realized that this product wasn't fit for market. Then Manuel come up with a concept, and Manuel's brainchild was, I'll put my old fund of funds hat back on. Kev, if we do a fund of funds and we create the world's first fund of funds in the asset class, because Manuel checked and it didn't exist, we can answer those three questions, or we can solve those three problems.
Okay, that's interesting. So let me then obviously turn to you, Manuel, because I still think at that time, much of the space was still full of very young, very, dare I say, flaky companies and funds. So you're the man in charge of kind of finding quality funds you're willing to put your name to. So talk me through the kind of search and due diligence process that went on as you were trying to establish this fund of funds.
Okay, well, at the time it was hard because we found, using our contacts everywhere, okay, worldwide, all the contacts, even the prime brokerage and fund administrators, we found about 30 funds, okay? We contact every single of them. Some of them, just to see an email, you would say that they wouldn't pass a meaningful due diligence because they were just one single man and they thought that they were doing very well in 3 months, that they set up a fund, and so forget those ones. But we traveled to the US, we met a few managers there, we traveled to Switzerland, we traveled to Australia. We did some trips to meet these managers face to face to understand everything. And we managed to have, I think it was 5 funds at the beginning, that they could pass without doing the due diligence, but they could pass the due diligence, seeing based on what we saw. And then we thought, okay, let's start creating block asset management. And we wanted to set it up in Luxembourg because it's the biggest country for fund management. It's the second biggest one in the world after the US for fund business. And obviously its reputation. So we wanted to Luxembourg. So we went to Luxembourg, we applied for the license, for the fund management license, an AFM. And what normally takes you 2 to 3 months, it took us 9 months. Why? Because the regulator in Luxembourg in crypto, they never met before. So we had to be there with the lawyers. I don't know how many trips we did to Luxembourg to explain our model, that it was fund of funds, we were not touching crypto, but still they wanted to understand everything. And not just everything, but they wanted to understand our due diligence process. So at the time we started doing the due diligence on those 5 funds, and we realized that the digital asset space is totally different than the hedge fund world. Because in a hedge fund, when you do a due diligence, you have a model that you check A, B, and C. But in crypto, we realized that we needed an extra layer of due diligence. We call it layer 2, internally, of due diligence. Because obviously, in a crypto world, you have fund admin, you have auditor, you have prime broker, you have, you name it, depositories, banks. But in crypto, you have the exchanges. At the time, you even didn't have custodians. They're almost non-custodian. Today's, yes, but at the time, it was totally different world. But we needed to understand all the operational risks or potential risks that there are in the crypto space. So together with CoinShares, that you probably know is one of the biggest asset managers in Europe, they help us to build that second layer of due diligence with all their experts to understand all the risks. And now, obviously, after 7 years, we have our internal models, our team who help us on ongoing improvement. But at the time, that's how we managed to do the due diligence. Obviously, now the funds that we invested at the beginning, they are billions. They have billions funds under management right now. They are the biggest ones in the space. Not all of them, some of them. Obviously, we have redeemed from some of them that they have disappeared. Obviously, it's just depending. But since then, the asset management, the fund management industry has grown a lot. We have probably nowadays about, I would say, around 2,000 funds in the space, in the crypto space, and growing a lot. I think it's 1.6 billion, the total fund management industry, and it's expected to grow to 5 billion by 2030. That's the last numbers that I have seen.
So you started with just 5 funds that passed your due diligence, and where are you at today? How many do you have in there today?
We have 14 funds right now. More or less, our model is based on around 14, 15 funds. At one point, I think we had 16, but more or less the average is to work on 15 funds just to provide enough diversification we think is key in this asset class.
Okay, so Kevin, there's one thing to do all that careful due diligence and pull the whole fund of funds together, but what we can't escape is the much higher volatility of these assets versus more traditional ones. So how has that been reflected in the performance of the fund since you launched it?
Yeah, one thing we can guarantee in crypto is volatility. It's par for the course, as we say. If you think, I mean, part of our story and why we're still standing today, and the proof that we built our house on the rocks and not the sand, is that we actually launched the fund at the peak of the 2017 bull market. So if you imagine, we mentioned earlier on that in Q1 of 2017, we had the concept, the idea, and we wanted to move forward. And Manuel adhered to that it took 8 or 9 months to get the go. We were ready to press the button as the market was rising and rising and rising, waiting for the okay by the CSSF. Come the end of the year, we get the okay, we launch, and then in January, the market, pretty much the day we pressed the button, came tumbling down. So imagine launching a fund that in your first year, you post a 50% loss. Firstly, you need to make sure the fund was sold on it is correctly structured and was sold correctly on the right merits and your explanation to the expectation of the asset class was correct. So bearing in mind that half of the seed capital come from the team and the directors, we also had our seed capital investors that we had to explain to when the market was down to that level. It was okay. We weathered the storm with a small team and very small outgoing costs, and we slowly started to generate the return and following the performance and replicate what was happening in the crypto industry. So as a diverse fund of funds, we give full participation to the market in many guises and verticals. So when the market's down, we're going to be down. When the market's up, we're going to be up. At least that's the plan anyway. The aim is just to be slightly better in each vertical. If it's down, we shouldn't be down as much. If it's up, we want to kind of beat certain benchmarks and certainly be in the upper echelons of the funds in that space. But there's no denying that there's extreme volatility. We had fantastic years, and the market, let's talk more in general with the market rather than fund specific. The market had fantastic years. So we had the fantastic 2017 that we missed. We were too late to market. Then we had the catastrophe of 2018, which we were part of. We had the stagnant 2019, and then 2020, we see the market start to grow. The market delivering, almost a triple-digit return within the market. And then 2021 came around, and it was, again, like 2017, these 4-year cycles. No coincidence, the 4 years. Bitcoin halves every 4 years. And the 2021 was a year where the market was fantastic. Posting triple-digit returns was easy. We certainly did it, and many other funds did it. We weren't alone, but we were in the top quartile of funds and the #1 performing fund of funds. And by that time, we had competition. There were a handful of other fund of funds in the space, but we were the top performing that year. Then along comes FTX fiasco in the year of 2022, which I can only describe as the perfect storm. Not one hurricane, 3 or 4 hurricanes coming along at once, whether it be the FTX collapse, the Celsius platform collapse, the Terra Luna collapse, or the tech banks in the US collapsing, your Silvergate, your SVB, etc. So it was a year of all years, and the market suffered, incredible losses. Markets are upwards of 80%, some tokens and altcoins 90-95%, a really difficult year. But it's during those bear markets, or if you can weather those bear markets, and I will say that I'm aware of a dozen funds that didn't survive the first bear market. You can times that by 3, the amount of funds that didn't survive 2022, to still be standing and post close to double-digit return in 2023, and 2024 being another positive year for the space. It's good. This year is predicted to be a very good year in the space, although I must say the volatility at the moment and some of the news articles that are broke that you may want to touch on, they're certainly impacting the market right now, but we're still very positive that this is going to be a good year. But volatility is assured.
Absolutely. So Manuel, just coming back to you from your extensive experience in hedge funds, is there some kind of holy grail here where we could experience the highs of the market as Kevin's just described, but somehow hedge against these massive falls through other uncorrelated assets? Is there scope for some clever financial engineering here?
It's difficult to describe this because obviously within the hedge fund world, obviously being so many different strategies, but in the crypto overall and looking at our different strategies that we have in the portfolio, you can see everything. Okay, we have from fixed income type strategy, which you just get an average of 10-15% per annum in that strategy, is a very conservative equivalent to the fixed income in traditional markets, basically. Obviously using different vehicles and different underlines, but that's the model, to the venture capital and private equity funds. So obviously it's totally different. One of the things that is true is that the crypto market or the digital asset market, especially in the early cycles that we went in, from 2017 to 2020, 2021, it was really driven by retail. Okay, it's a world driven by retail. I think now, 2025, it's lately been described, I describe it as crypto 2.0. And that is basically because we never have seen a market with a US president pro-crypto, a US government pro-crypto, having the biggest financial institutions in the world. The owner of the world, half of the world, which is BlackRock, Fidelity, Franklin Templeton, all these companies being pro-crypto and submitting the launch of new products in crypto-related ETF, launch tokenization of equities and bonds that is coming. To do all this, you need the technology. So the opportunity is there. That's why we call it Crypto 2.0, because it's totally different what we have today than what we had back in 2017. Regulation as well is super important. And I think now everything is being how we kind of what we were expecting, what we were called that we were mad going into this new industry. But nowadays, I mean, we are proud to say, okay, we have done it. You know, we did what we were expecting and it has happened. But obviously, now the volatility in the market, that's something that we cannot manage. We can manage somehow, and now we are finding Coca-Cola recipes to reduce the volatility from now on, changing a little bit more to more defensive strategies. But we didn't do before because there were no products available. Now we have it. Like in the hedge fund, you had the market neutral strategies. In crypto, it didn't exist. Nowadays, you have those.
Okay, it's interesting. I do love the way once they smelt the money, the likes of BlackRock and JP Morgan and so on suddenly turned from, oh, this is all for drug dealers and whatever. And now it's a really important asset class. You know, I think it's so amusing to watch the change that we've seen there. But one of the problems we do have, you brought up the regulator there. And, you know, Kevin, we've got a nanny state regulator in the UK that won't allow British citizens near some of these assets, and including, I think, this fund. And you've set it up in Luxembourg. So where are you finding that you're drawing most of your investors from, given that you know, the UK won't allow us near these dangerous assets?
Yeah, you're quite right. The UK is kind of lagging behind here, innovatively wise, in what they will allow and won't allow local nationals to invest in, and the funds that they can invest in. We again, a lot of the investments that we receive is reverse engineered, as I mentioned earlier. If you recall, we have our global networks, and through our experience with our previous business, Wealthix Global Partners, and through the relationships we'd had there, we had a broker network and a network of potential investors globally that would use international platforms or would use international banking products and facilitate some of the larger banks in the world, Swiss banks, for example, which is where the savings were held. So these offshore or international investors would invest through various platforms that can. So our custodians will be various platforms, various Swiss banks that will invest in the fund. And those would come through a network of wealth managers, brokers, IFAs, family offices globally. So in the early days, the relationships that we had between Manuel and I were predominantly mainland Europe and Latin America, South and Central America, and North America for myself, and Mexico. And that network was quite large for us. We also brought in a sales director who had a lot of contacts in the Americas, who was formerly head of Latin America for a large Swiss bank, and his network was predominantly Latin America. So we had a lot of inflows coming from Latin America, and then we created a certificate for the fund as well. That was a feeder that was available to get onto numerous platforms, and we had the fund registered for distribution in Switzerland. So we had a number of investments flowing from Switzerland as well. So more crypto-friendly jurisdictions, to be honest. But at the time, most investors and most platforms just saw us as a fund of funds. You know, we don't physically touch crypto. It's not that we buy, hold, and store. We're investing in financial instruments that do invest in crypto products. But we ourselves, fiat in, fiat out, Luxembourg fund of funds. So, you know, we tick the boxes for many investors that wanted exposure to the ecosystem in a nice, simple manner of you know, just having an ISIN number for a fund that has a 5, 6, 7 year track record. So, you know, very global. It's changing. We're now getting more and more investments from outside of those 2 or 3 regions. We're now expanding into Africa and into Asia as well.
And also, I think you've been able to bring the entry level down to a more accessible kind of point for people.
That was key as well. Yeah, bringing down that 100K to sort of a 10K threshold was really, really important for people.
Okay, cool. So also, I think one of the things you've done is quite innovative is I believe within your own core team, none of you's drawing a salary. You're all kind of equity holders in the business. Is that correct?
Yeah. That's correct. We have now seen, that's correct. Obviously, the partners, we are just basically, if the business goes well, we will get paid. If the business is not well, then goodbye. Okay, so that's our model. We now have obviously other members of the team that are just, let's call it salary based, or they just get, we're contractually, but the core management and partners team, we just basically get in. It's our model that we believe that's the way forward, because if we don't do our best and we don't make money, what's the point of getting? We are not going to get a loan to get paid. You know what I mean?
Yeah,
I
indeed.
believe that, I think, sorry, just to interject there, I think that if you're building a business as an entrepreneur and you're building a business, if you want 100% commitment from your team, they've got to have skin in the game. I truly believe that. And by giving them equity from day one and dangling, obviously there's terms that need to be met on an annual basis to a period where they've reached their maximum we're willing to give them. And therefore, we're the same 5 guys that have been together from day one. We haven't lost anyone. We brought a couple of additional people in, but as a team of 5 directors, it's the same 5 guys. We'd worked with them all in the past. They come in because Manuel and I had worked with them in the past, and they're who we wanted from day one to bring in. But we gave them equity. We dangled that carrot and said, look, this is an equity play. There'll be periods where we're not making money, but it's a long-term goal. When the times are good, they're going to be very good. And that's indeed been the case.
Yeah, so I think, Kevin, just to build on that, and I know your main focus is business development. Are you seeing, because of this more mainstream adoption of digital assets, are you starting to see more asset allocation from the likes of family offices and institutions now that it's kind of got that mainstream tick in the box?
Yes, very much so. I mean, it's a double-edged sword. It's good and it's bad, if that makes sense, because now that you've got those viable options of the ETFs from the likes of BlackRock, then there is now a simple, quick, and efficient way for someone to access the asset class. But at the moment, that's Bitcoin and Ethereum. So, for a lot of the US-based companies anyway, but it's Bitcoin and it's Ethereum. If you're looking for true diversification and you're wanting the broader ecosystem, then that's not for you. If you're wanting access to the broader ecosystem, if you're looking for a fund that can be more actively managed, and control weighting, at times be a little more defensive by increasing exposure to market neutral and fixed income, staking kind of returns, and then at times swing more passive or swing, more long in the market, then you need an actively managed fund. So whilst Bitcoin last year the Bitcoin ETF will have been a good investment, I think over the next 12 months, you'll see that will lag the wider market as the wider market plays a massive catch up. There's so much of the wider market hasn't moved. We still see a lot of what we believe are good tokens in the space with real utility, with a real community that are still 5, 10, even 20x from all-time high. So if you can get those selections right, this is where the triple-digit returns come in, and by having access to the world's largest venture capital and private equity funds in the digital asset space, you can look to capture that return. But again, manage liquidity carefully. But it's a very diverse ecosystem. There's so much going on in there that you really do need the help of a professional, of a proper fund manager that can eliminate the unnecessary risks and try and unearth the unicorns of tomorrow.
Indeed, yes, absolutely. And I know earlier on, Manuel, you talked about your enthusiasm for the digital kind of transformation, as you called it. But one of the things I've had recent experience of is where the world's kind of infrastructure is lagging behind. We've just done a capital raise for a company called Asset Pass, who are a digital inheritance platform. So what they're recognizing is that if you look across most of us in terms of planning our estate, in planning the transfer of wealth to the next generation and so on, we actually hold more and more assets digitally. So that could obviously be Bitcoin and cryptos, but it could be digital art, it could be deeds of property. I, for example, went recently to my will writer, one of the biggest ones in the UK, and said I wanted to make some updates to my will, and that included cryptos that I own. And they more or less gave me a blank stare and said, I'm sorry, we have no idea how to cope with that. You'll need to go somewhere else. And so they literally just said, please take your business elsewhere. So, how do you see, from your perspective, the kind of other aspects of the infrastructure that we need to improve if we're going to truly achieve this digital transformation?
Well, I think basically, I mean, the world, as you know, as I said, and we are all seeing on a day-to-day, the world is going very quickly, but still new things that are happening, like new technology, like what you are saying, you own Bitcoin and you might have a ledger, or you might have it in a wallet and you have the keys somewhere written. And how do you pass that somewhere? There are already applications that they are doing this. But obviously, everything to find those, you need to find a trustable one.
Mm.
Maybe to see one trustable one, you will see 100 apps that are just not saying fake, but business that are going to disappear 1 year down the line. So it's still we are in a beta stage. Everything is kind of testing, and so all the program it's like ChatGPT. You know, probably a couple of years ago I started using ChatGPT. It's something that changed my life, I have to say, and AI changed my life, and it's going to change all our lives. Okay. And I don't know if you use it for your podcast or for your business, but I think it's something unbelievable. And the important thing now is, are you going to learn and adapt, or are you going to get out? And I think the next 5 years, the whole world is just going to change dramatically. So investing in blockchain, AI, all this new technology, investing in technology overall is the future. I mean, you see the Tesla, you see all what is the lovely Elon Musk with all his mad ideas now launching robots and things like that, that they are so, but this that we were thinking when we were little, that's the future, we'll never see that. That is already happening. Car driving alone. You never thought about this, and that's already happening. So the disruption is here. What happened is all of us, we are not ready because we don't have the tools or we don't know the tools. So we need a lot of education to understand. It's like AI. You can do so many things, but you need to know which tools to use. No. So
What will happen if I interject there, Manuel? What will happen? You mentioned, Graham, the will writing service or the company that you were using saying, "Oh no, take your business elsewhere. We can't handle. We don't know what to do with this." We had the same problem when we launched the fund, looking for an auditor. We went to the Big Five, and the Big Five said, "No, we this is not something we can touch." Roll forward 5 years, and we had the Big Five knocking on our door saying, "Would you like our auditor services?" So you'll find the same things happening within industries now. Those industries, just like your BlackRock and your JP Morgans, a number of years ago were no crypto, no black Bitcoin's rat poison, whatever they use to describe it, done a complete 180 and start investing. You'll see the same from the companies now that are saying, no, we're not going to deal with these services because we don't have the capacity. If they're not already employing people behind the scenes to learn how to change that and to be able to facilitate the digital assets world, I'd be very surprised, and such companies will be left behind. You'll see they're all now onboarding techies, they're onboarding people that have the capacity to transform their business into this new digital age. So in a few years' time, don't be surprised, Graham, if they come back knocking at your door saying, do you still require those services? Because that change is ongoing in the background of every industry you can imagine.
yeah.
Absolutely, and I think one of the thoughts I had is in the same way as small companies like yours and mine are often the most flexible and the most adaptable because we can make changes quickly. I also wonder whether small countries and territories will be the same because you're based there in the Isle of Man, which is obviously got a tradition of the financial world. But I do think that it seems so much easier to pass some new legislation or to invest in some new infrastructure on that sort of scale versus the whole of Britain or the whole of Europe, the EU being very slow, very over-regulated, etc. So if we were to kind of fast forward to the landscape by the end of this decade, and I'll ask you both this. I'll start with you, Manuel. What kind of digital world do you think? What kind of digital landscape will we be living in by 2030?
Well, that's a lovely question. I loved it, but I could speak hours on that, on different topics, because everything is so broad. The problem is that because I see that the world is not ready, the typical people in the street is not ready. And we are the world is divided into two, the techies and the normal people. Okay. So for the normal people to adapt, that is going to take time. It's like internet, I remember, I think it was Bill Gates in 1994. He went into TV and he talked about the future of the internet. And the interviewer, I don't remember the name, He was laughing at Bill Gates, president of the US, thinking that he was mad talking about something called internet was going to change the world. So the same things are happening now with new technologies, but because everything advanced so quickly, I know we are going to live in a world that everything is technologically, it's no papers anymore. It's no, even cards, the credit cards. I mean, money, physical money. In many countries, physical money is almost forbidden. In Spain, the maximum you can take from the bank is 1,000 euros. Otherwise, you need to report to the tax authority. I said, what's that? In which world we live? So everything is going digital. We are already in a digital world. You normally, I don't never, ever carry any money, not even £5. I don't. And that's a big mistake, but that's how I am. Everything is digital. So, and it's going to go more and more. The central bank digital currencies, that's another aspect that the lovely President Trump has forbidden, because it's a lot of intrusion in what they can control what you do. Europe is the opposite. Europe is looking into it, testing it. I am in favor of what Donald Trump is doing, of forbidding the digital world, the digital currencies, because the risk involved. But overall, I think we are going to see a hell of a lot of transformation, and not just, and also in the labor, seeing how people work, everything is going to evolve, and a lot of jobs are going to become redundant, because with AI, you can remove in a business that they have 50 admin processors, they can go. You will need just one guy that knows how to use this. So you need to adapt. So the whole, even university, the whole world has to change. Banking, you can get a financial advisor with ChatGPT. Why do I have to pay another one?
So well, the good news is we can finally get rid of the lawyers.
Yes. ChatGPT will give you all the cases, will help you to defend.
Exactly. So Kevin, let me just bring you to the conclusion there, because the clock is against us. So what's your kind of take? Say, perhaps take an Isle of Man perspective. What do you think the infrastructure on the Isle of Man from a digital perspective might look like by the end of this decade?
Well, do you know, I had a great example of this just the other night. My son come back. He come back from Domino's Pizza Parlor, and he said, "Dad, I couldn't get a pizza. I couldn't. You didn't have cash on my card, and I only had cash. I didn't have anything on my bank card. And now here on the island, the Domino's won't accept cash. You have to pay by card. So I didn't know that. So he wasn't able to buy a pizza because he didn't have cash. And it got me thinking that this is where we're going. I now, in every taxi, most taxis I get now, in the taxis here, you can pay by Bitcoin. In the hotels on the promenade on the Isle of Man, you can pay by Bitcoin. In a number of the bars here in the Isle of Man, you can pay by Bitcoin. So when people say to me, and I don't hear this much anymore, but people used to say, well, it's useless, you can't spend it. You couldn't be more wrong. You know, the Isle of Man has got really good now and pushing the digital sort of sphere here, in that you can pay with Bitcoin in so many services here on the Isle of Man. Okay, so many. So the island is quite tech savvy, to be honest, for this small island. And as you rightly say, the smaller companies, smaller jurisdictions, they can be more nimble and move. So I think in general, we've already for years been going towards a cashless society. We have for years. I just think now you're going to get away from using fiat as that format and go more towards digital assets. And I think that the concept of loyalty schemes and getting rewards and bonuses on what you pay, this isn't something new. I mean, anybody that's had a Boots card for the last 20 years or plus, you buy on Boots, and at the end of the month, or certainly my wife makes use of them, you have a number of points and you spend those points. And they're just given to you as a reward for your tokens. The same with Tesco, etc. I think that as we go towards a cashless society, we're going to see the introduction of more than just Bitcoin, a number of real spendable, because I don't think it's going to be Bitcoin. Let's face it. When you have the value increasing at a rate it becomes a store of value, and it's digital gold. So spending Bitcoin to me is insane. Okay, but that's some people may choose to do so. What you'll see is the emergence of other tokens, be it Litecoin, be it something else that will emerge out there. Yes, you've got your stable coins, the obvious ones. And I think you'll just see more and more loyalty programs, more and more schemes where you will get rewards for using them. And you'll see an emergence of NFTs in a new format. NFT 1 or 1.0 was a complete failure. Nobody wants to pay for a digital monkey and pay a fortune. But when all of a sudden, as an avid football fan, I have a membership of a football club and I can buy an NFT, which gives me a chance to meet the players once a month for all NFT members, or you get discount ticket prices, a discount in the goods store. So almost everything will have some kind of membership or NFT that you can buy that will give you discounts, opportunities, benefits, and rights. So everything's changing. We're going to see a wave of new technology advancements in the way that we do business, particularly in data storage as well, and everything from governments, voting, doctors' records, everything. We're all going digital. We're all going on the blockchain, and the cost of everything is going to come down.
Brilliant. Well, I think that's a good point at which to end with that view of the future. And I hope you're also on a retainer from the Isle of Man Tourist Board for the number of times you've mentioned them in this interview. But it all sounds very exciting, and wish you the best of luck with the fund. So for now, Kevin Ballard and Manuel de Luque from Block Asset Management, thank you very much for joining us.
Thank you, Graham. Thank you.
Bye for now, folks. We'll see you next time. Thanks for listening. If you're ready to start your own 8-figure journey, head across to 8figuremasterclass.com and sign up for the next free preview broadcast.